Hi, good afternoon. You're watching Closing Trades, and we're coming to you live from the SBI Live newsroom or studio. And we're holding up. We're trying to reclaim that 25,000 mark. In fact, in the futures, 25,100 already here. For the spot Nifty as well, it's doing good after a little bit of an aberration that you had, just about getting to that level as we speak right now. But it's been largely quiet and flat for the better part of today's trading session. Well, of course, telecom is your big story today, and that's the sector which is the biggest contributor. There's metals, chemicals, and power also, which are holding out well in the green. But on the flip side, cement, financials, they're the ones which are not doing a whole lot, and it's pretty flat for realty, for FMCG, autos as well, seeing some amount of profit taking today. Fortis, ahead of its buyback announcement or the board meet, that stock is lower by 1.5% as we speak right now. ICICI Bank, L&T, M&M, Hindalco, Unilever, a whole bunch of large caps are the ones which are not really participating in trade today. Shriram Finance, that's the one sitting right on top. There's Adani Enterprises, there's Eternal, Axis Bank, and Sun Pharma. Those are your big winners today. The breadth of the market slightly tilted in favor of the advances. Aurobindo Pharma holding up 5.5%. NHPC has been doing very well today. That's up 3.5%. BHEL, Hindustan Zinc, and GAIL are your other movers as well as we speak right now. But let's take the conversation forward. We've got our fundamental and chartists as well joining in on the show, and let's talk about what they make of the market. We've got Sudeep Bandyopadhyay joining in on the fundamentals, and Kunal Bothra right here in the studios to talk about the technicals. Kunal, first to you, because while we've made it to 25,000, it continues to be a tough resistance. We're unable to hold on to that mark conclusively.
Yeah, I think we are not, finding an additional bout of momentum which we would probably have expected, because of that lack of short covering which is still there. Just looking at the options data, which becomes the key data point to watch out for, especially when you have the index heading towards a major, psychological or round figure number. So I think that data point is still lacking or missing, where you're seeing extensive short covering on the call writers front, and I think that's one of the reasons why you've seen the index a little bit more listless. Even on the stock specific front today, I think it's more to do with the individual names. The PSU stocks apparently have done reasonably well for themselves, and I think there are some pockets within the PSUs where there is a slight indication that there could be more carry forward momentum. But then as of now, I think just looking at the market reaction overall, it could be termed as more of a flattish day for the indices.
All right, so more of a flattish trade for the indexes seem to be consolidating, yes, of course, but India Wakes, that is also down. Almost a 1.3% decline is what we are getting to see. But Sudeep, hi, good afternoon. And indeed, a lot of sector churning that is still underway just last week and this week as well. We have seen a bit of a resurgence in the IT pack. Yesterday, metal and defense was also doing good. But help us understand what is your view on the sector churning that is underway, because today some of these beaten down PSUs are making a comeback. Anything that is looking interesting to you?
Well, good afternoon to you and all the viewers. I think what's happening is market is lacking a very clear trigger at this point in time. That's the reason why we are seeing a movement which is range bound, and there is a definite upward bias in the market. That's why we are seeing market inching upwards, but there is no clear trend visible. Now, of course, based on news flow, based on what is happening around us, things are moving up or down. Of course, the IT got a kind of a leg up when the buybacks was announced by Infosys. Of course, we'll see the specifics once the board meeting gets over today. But the fact is, there is a buyback which is going to happen. Very clearly shows that the companies are looking at rewarding the shareholders. There are expectations being built around similar buyback being announced by TCS and some of the IT majors. This is creating the excitement in the IT pack. Metals and defense, of course, again, very specific. Some of the order wins are propelling the defense companies forward. Metals, I strongly believe that I think overall, the structure for the metal industry does look positive. It's a structural positive, is going to continue for some more time. Leave aside the regular ups and downs. Metal is in for positive time for the foreseeable future. Having said that, I think I will still focus on large cap stocks and in sectors which are not too dependent on global headwinds and global trade issues. So look at cement, look at, let's say sectors like infrastructure and construction, where there is a lot of spending is happening by government and even private sector. So these are the sectors which should be definitely looked at. FMCG is on the path to recovery. There are views which are varying depending on when the recovery will come, but definitely they are on path to recovery.
Right. Sudeep, hi, this is Snehi also joining in, and good afternoon. I just want to understand a little bit more about your view when you say the markets are missing a clear trigger. Because, when we had the GST announcement, we did not see all that much happening in the market. And also when we had comments coming in a few days ago from Trump and PM Modi both saying that they're going to be re-looking at negotiations on the tariff front, ideally that should have got the market excited, but we did not see anything like that. Do you believe after the 22nd of September, when GST comes into play and when we have more clarity on the tariff front, perhaps then the market could see some upside?
Well, Snehi, to a great extent, the GST relief or GST bonanza has already been factored in by the markets. The stocks and the sectors which had to move up has already moved up. Now people and the market will wait for actual performance to get demonstrated before there's a further leg up. So I don't think there will be any major movement upwards on 22nd September onwards. Of course, at this stage, pretty much all the auto companies as well as consumer durable companies are witnessing a bit of a slowdown in sales. That's pretty much because of the fact that people are waiting for the new GST rates to kick in from 22nd before going ahead and purchasing. In any case, this is that Shraddh period where the sales slow down, and that's pretty much what is happening. 22nd, the new festive season starts and the purchases will start. So things will pick up, but I don't think that will get reflected in a major way in the share prices because I think it's already factored in. As far as the Trump and Modi announcements are concerned or the tweets are concerned, I think, for lack of better word, we have seen this movie many times. If we start getting excited with the tweets of Mr. Trump, I think, we will have upheavals every day. So I think people have started getting used to the fact that we are in for this kind of tariff, 50% tariff, which is on about roughly 50% of Indian exports to US, and that's going to stay for the foreseeable future. Very clearly, India cannot cross the red line which they have drawn, particularly on agriculture, dairy, and things like that. And without that, getting a favorable deal from US is unlikely. India is not going to kind of concede on buying Russian oil. They will not stop that. So none of the points which US have raised as their supposedly their concern areas will not be addressed. That's pretty much well known. So how the compromise will be reached, where the compromise will be reached is a question mark. It should happen, it would happen, but it's not going to happen in a hurry and not surely based on some tweets by somebody one side or the other. It requires long negotiations, which is what Mr. Piyush Goyal is indicating, that he is looking at sometime in November, December, by when he thinks something reasonable can be struck.
Right. Well, that's how our days end and that's how our days begin as well with Trump tweets. I can assure you that, Sudeep. But yeah, progress is being made on the US-India deal, says Commerce Minister during a press briefing in Patna. Piyush Goyal said that PM Modi and President Trump instructed the two sides that we should have a good agreement by November. Let's listen in.
फरवरी 2025 में माननीय प्रधानमंत्री नरेंद्र मोदी जी और राष्ट्रपति ट्रंप जी ने मिलकर हमें निर्देश दिया था कि दोनों पक्ष के मंत्री फॉल 2025 यानी नवंबर 2025 तक एक अच्छा करार करें। उस करार का पहला अंश, फर्स्ट ट्रैंच, नवंबर 2025 तक फाइनल करें और लगभग मार्च से इस विषय पर बड़ी गंभीरता से, बड़े अच्छे वातावरण में बातचीत चल रही है, प्रगति हो रही है और प्रगति से दोनों देश संतुष्ट हैं।
Okay, that's the word coming in from the Commerce Minister that perhaps some negotiation could be in sight by the month of November. But just looking at the market technicals today, and Kunal, it clearly seems like, unfortunate as it may be, IT didn't lend support beyond 2 days. Had it been for IT still contributing, perhaps we could have had better levels, right?
We could have had better levels, but Aisha, I think it's a good sign that IT stocks are consolidating. OFSs today opened with a gap up of another, I think 5-6% or more. Persistent also had seen a follow through. So, when you have such kind of a steep gap up after 10% or 9% yesterday, it's bound to be that these stocks would consolidate. And I think that would be a healthy sign. I'm also seeing that, there's no major retracement or selling into these IT names. So, when you look at Infosys, TCS or other larger cap names like HCL Tech, Techem, etc., it's not as if that these stocks are retracing their last, 2 days, 3 days of price gains by a huge margin. Yes, these stocks, they have softened up, a little bit more from the intraday highs, but then I think these stocks are just about going through a time-wise consolidation. I believe that that would be a very good opportunity. So something very similar which happened to the auto index over the last 2 or 3 days, where you've seen retracements for many of these auto stocks because they were overbought on their daily, weekly time frame. I think a very similar kind of a chart is what we are expecting could turn out for the IT pack. My sense is that this dip should be bought into for especially the larger cap IT names, TCS, Infi, as well as Wipro, HCL Tech.
All right, so that's the take coming in on the IT space. But one of the key stocks to watch out for will be Infosys, as there is a board meet today to consider the proposal for a buyback. And if approved, this will be the 5th buyback from the company since listing. My colleague Ashesha joins in with more details on this one. Ashesha.
Well, yes, all eyes are on this IT major Infosys, which will be conducting its board of directors meeting later today to consider buyback. Now, if we look at the history, in 2017, they had announced a total buyback to the tune of 13,000 crores. In 2019, 21 and 23, the buyback size was anywhere between 8,000 crores to 9,500 crores. Now, as far as the premium is concerned, the buyback price was at a 30% premium in 23 and anywhere in the range of 18 to 25% in the last 3 years. So buyback premium is expected to be in the range of 18 to 30%. Now, if we look at the company's policy for paying out to the shareholders, the return stands at about 85% of its free cash flow on an average period over the last 5 years. And as per analysts, about 70% is given via dividend and the balance 30% is given via buyback. Now, as far as the total size is concerned, now remember, total paid up capital and reserves and surplus stands at about 95,000 odd crores. And the management and the company has a history of giving 12% of its total reserves as buyback. So if we consider 12% of this 95,000 crore, it translates to about 11 to 11,500 crores. That's the expected total buyback size. As far as premium is concerned, as I mentioned, it is expected to be anywhere between 18 to 30%. And if we consider that, then the buyback price is expected to be in the range of 1840 to 1900 rupees per share. And considering the total buyback size of about 11,500 crores, about 6 crore equity shares are expected to be bought back by the company. So that's the rough math and the expectation with respect to Infosys buyback announcement, which is expected to come in later today.
Okay, Ashesha, thanks for taking us through that. Well, yes, all eyes are going to be on the stock of Infosys, currently taking a little bit of a cut in today's trade, but that buyback announcement from the management is going to be very closely watched out for. But we also interacted with Sandeep Tandon, the CIO at Quant Mutual Fund, and he is betting big on the Indian IT space. Let's go across and understand why and what's the rationale behind that.
We have built exposure in the large cap IT because they are relatively more cheap. And most important thing in this challenging environment, I always say liquidity is more important than the returns. So mid cap IT maybe all looks very nice, but they are relatively illiquid as compared to the large cap name. And given the background, I think purely from a liquidity perspective, valuation perspective, and safety perspective, I think Indian IT large cap looks better than the mid cap space in general, but obviously there will be stock specific opportunity in the mid and small also.
Okay, let me welcome on board Arpit Beriwal as well and find out what he's been reading on the charts. Arpit, what trends are you picking up? Where is it that you see sectoral leadership?
Very good afternoon to all. So overall, if you look at the broader indices, if you've seen a very stock-specific action is seen. So first, you talk about Nifty. So Nifty is slowly, steadily is moving higher from 24,600. It has slowly, gradually moved towards 25,000 plus levels. So now, looking at the overall setup-wise, I think banking and IT, these are the two sectors to watch out for. In particularly IT, if we see heavyweights has seen good momentum in last couple of days. Today, it's more of a consolidation. So our sense is that more stock-specific action is likely to continue, but we can look out for selective IT stocks. Along with that, one sector that is looking very strong is PSU banks. So yesterday, the main rally was led by PSU Bank. So I think from the banking space, PSU banks look quite interesting, and Indian Bank and SBI looks quite promising from here on. Also, we can see good momentum in this space going forward.
Is actually looking good to Arpit, and I remember Kunal that also flagged this off in the morning, and Kunal, this stock is at its all-time high right now, 695 thereabouts. So that's on Indian Bank. But Kunal, while we're talking about stocks that are at all-time high, you also have Fortis and GMDC that have inched their respective all-time highs. Does the chart setup still merit a little bit of a further run-up from here, or do you believe now is when these stocks take a little bit of a breather?
So GMDC, I think, should take a breather over here after today's sharp intraday correction, more than 10% or 15%. I think 560.70 was the high for GMDC, and the stock made a low which was around sub 500 mark mid-session somewhere. So that just puts the brake for the stock price, at least in terms of the near-term momentum. It doesn't change the trajectory of the trend on the upside, but then what happens is when stock runs, when stocks run into extreme overbought territories, there are bound to be these knee-jerk price actions which causes the stocks to consolidate and start to get into a little bit more volatile phase than what has been earlier. So I think in that sense, I would probably expect GMDC to just about be a little bit more volatile, try and go into a further correction mode over the next couple of days maybe. I think Fortis could be an interesting stock. In fact, the entire hospital space has been looking very attractive. Whether you look at Apollo Hospital, which has been one of the more stronger stocks, even the recent past, the stock breaking past above the 7750, 7800 barrier. And then Fortis also, I think, on the short-term charts looking very attractive, being more consistent on the upside. So I think this could be one space where one could look at a buy, and in case if there are any kind of minor dips, because these stocks are not very volatile, so you may not see those 10% kind of a gyrations into these names. But in case if there is a 2 to 5% dip into the stock price, that should be a good level for traders as well as long-term investors to average.
All right, so that's the take coming in on Fortis Healthcare. But other than that, one of the other counters that is in focus today is actually Aurobindo Pharma, because just in the morning we did flag off that yes, the company could be in focus on the back of Zentiva reports, wherein some reports are suggesting that there's another company, GTCR, that is nearing a deal to buy the generic drug maker Zentiva, because just in the month of August there were some reports that Aurobindo Pharma was actually looking to acquire this company at higher valuation of close to $5.5 billion. It did had some investor concern back then, but if you see Aurobindo Pharma specifically today, that stock is on the roll. But Arpit, just wanted to have your take, though this is one of the news flows that we have got seen to be taken a bit positively by the markets. But what are the charts telling you? Because the stock has been underperforming for quite some time now.
The entire pharma pack, if you look at the chart structure of Auro Pharma, so it has been a huge underperformer. But the good part is that if you see on the monthly scale, it has formed a strong base near 1000 levels. So if you look at the last structure of almost last 7 to 8 months, multiple supports are intact near 1050 levels. So look at the overall setup wise, definitely the base formation has been done, but the real momentum will start above 1151 closing. So the sense is that level wise, 1150 would be a crucial level to watch out for. Closing above that definitely will head the stock towards 1250, 1300 levels. So from a positional perspective, risk reward is quite favorable at current junction with the stop loss of around 1020 for an upside move towards 1200, 1300 levels. From an immediate basis, 1150 will be the level to watch out for. Closing above that will definitely trigger the momentum towards 1250, 1300 in short term.
Okay, so those are the levels to watch out for on Aurobindo Pharma on a tear today and up about 5.5% as we speak. But shifting focus back to autos and on to the event of the day, my colleague Nivedna Prabhu caught up with Maruti Suzuki's Hisashi Takeuchi on the sidelines of the SIAM annual convention, where he spoke about their growth roadmap and the launch pipeline. Let's go across and listen into a slice of that chat.
This is a very, very big gift from the government to everybody. and also this is a very good support for, especially for the small cars. The small car GST was 29%, now becoming 18%, so 11% tax cut. That will give us, when we calculate the retail price, it will give us about 8.5% price reduction of the retail price. So that itself is positioning the small entry cars much lower position. So I think entry cars will become very affordable for many people. So I think this is a great support from the government.
It is a great policy push, and the timing of it also perhaps couldn't have been better given the festive season around the corner. So what's the outlook like?
I think we already see some good trend of increase of booking, and especially like small cars. For the first part of this year, small car is declining, but now from that level, I think we expect more than like a 10% increase will start after this GST cut.
And in terms of outlook for the industry as a whole, what are we looking at?
Yes, the small car is getting this benefit, but across all the segment, it gives us decent tax cut. So every segment will enjoy this GST reform, and overall, I think next year, financial year, the total industry will start showing 7 or 8% increase from H2 of this year and next financial year as well.
Something interesting that has, of course, happened for Maruti is with the launch that we saw in the Gujarat facility, with the Prime Minister being there, the export aspects that we're looking at it. What I want to understand is how is Maruti looking to get that balance between exports and the domestic demand, with the revised GST, of course, likely to perhaps influence consumer demand as well?
Yeah, of course, the domestic market is the biggest and the most important market for us. But as you said, export demand is growing. The year before, 2 years back, our export was 2.8 lakh. Last year was 3.3, and this year we see more than 4 lakh. So the growth rate is actually bigger than the one for the domestic market.
Okay, that's the word coming in from the Maruti MD and CEO. Of course, Motown is all geared up and announced so as well to dish out all those discounts come September 22nd, wherein they're going to pass on the GST cuts on to the consumers. But Sudeep, what I wanted to talk about is all the new paper which is hitting the market. I know we've often spoken about it, but I was just looking at urban companies' subscription figures, that along with Shringar and a few others. Anything from the primary markets that you're looking at?
Well, some of these new platform companies are definitely interesting from a long-term perspective, which is the view we have been maintaining. And I maintain my view on that. And I think, you mentioned Urban Company. It's definitely a platform. They are entering multiple new, smaller cities and towns. And, the management has very clearly clarified that that doesn't put pressure on the margins, because they are maintaining the rates even when they are entering the smaller centers. And that's very encouraging, because one would assume that they will have to reduce the prices when they enter smaller locations. But that's not the case, apparently. And I think the growth potential is humongous here for some platform like Urban Company. So from a long-term perspective, I'm definitely positive. The valuation at which they have come is not cheap. And investors, I would say that if somebody is getting allotment or somebody is applying, they should plan to remain invested for long term. If you look at the history, whether you look at a Zomato or a Swiggy or even the PB FinTech, I think all of them, after listing, we have seen a lot of volatility. But once they settle down, the business becomes kind of profitable. The valuation keeps multiplying. So I think that should be the trick from an investor's point of view. Of course, traders will do well, buying and selling into this volatility and make money.
Okay, Sudeep, appreciate that thought coming in, and thanks so much for your time today. On that note, we'll let you go.
We're just revisiting what the market is doing, about half an hour of trade left, and we have the Nifty. Let's just see what the Nifty is up to right now, and it seems like we're around the 25,000 mark. Okay, slightly higher than where we were, slipping below that 25,000 mark for a few minutes there. But we've recovered slightly from there. Sensex also up 0.2%. Nifty Bank trying to recover some strength, 0.3% higher. On that note, we'll slip into a very short break and talk more about the markets on the other side.
Welcome back to Closing Trades right here on ET Now. Yes, of course, the markets are holding steady. Nifty well above that 25,000 mark yet again, while Nifty Bank is holding a gains of over 100 points. But yes, a lot of these counters are buzzing, and let's talk about the next segment then. And since morning, we have been talking about how some of these PSU counters are making a comeback, and one such stock is actually BHEL. That stock is now higher by 4%. At the start of the day, we have seen some block deals also happening in BHEL. Kunal, just wanted to have your take on this one, because after a while, I think this stock is showing such bit of a move. What does it mean for BHEL?
Yeah, this is a good comeback for the stock, because I think after 10 straight weeks where the stock corrected from 270 to I think 205 was the low for BHEL, this seems to be a good potential turnaround. What's also happened is that the stock, I think when it was almost at 230 levels on an intraday high, had come closer to its 200 moving average in terms of a breakout. So this could be a double positive breakout for BHEL. The volumes have started to look very attractive, and that was the missing part for the stock in the previous minor phases of the rallies the stock had shown. PSU basket overall also doing pretty well, the market sentiment improving. I think when you have this kind of a setup, you're bound to see a point where these stocks would start to look very attractive and they would carry forward the momentum for itself. So BHEL looks very attractive at current levels. And my sense is that once this momentum just about picks up into a trending move, I would look at maybe a 245 kind of a near-term target for BHEL.
Okay, so that's the take on BHEL, but time to get in some BTST ideas from our chartists. And Arpit, where are you placing your bets, or what's looking attractive on the BTST view today?
So looking at the overall market trend, if we see selective pockets are really performing well, and first would be from the healthcare pack, that is Fortis Healthcare. So looking at the chart structure wise, a very strong uptrend on the monthly and the weekly setup, perfectly holding on to its 20 demo on the daily scale and bouncing again. So looking at the chart setup wise, definitely you can see new life highs towards 1000, 1020 plus, with keeping stop loss of 930. One can go along at Fortis for a target towards 1010. Along with the second would be, as we discussed about the PSU banks. So PSU banks, Indian Bank has been a huge outperformer in the entire PSU space, trading at life high territory, range breakout on the monthly and the weekly setup. Today it is consolidating at life high territory, but the good part is that it is holding above 685 levels. So one can go long in between 690 to 695 levels, with keeping stop loss of 670 for an upside move towards 730, 735 plus levels.
All right. So those are the calls coming in from Arpit. But Kunal, what about you? Which are your stock ideas?
So I'll go with two buy calls. The first one is Hindustan Zinc. That's a chart which apparently over the last many weeks has just moved into a different divergence with respect to the silver prices. But it seems like that now the stock is coming back into its own and potentially heading towards a rounding bottom formation breakout. So this could be an interesting play over the near term. 460 is what one could keep an immediate target. Stop loss could now be trailed higher to 435 since the stock has moved up higher by a margin of around 6 to 7 rupees. United Spirits is the other stock, and I think we are seeing some move coming back into the other peers like Radico, etc. But United Spirits starts to look attractive. The stock has consolidated over the last 1 month, just around this 1300 mark. Risk reward extremely attractive. Would look out for 1350 as a target. Stop us at 1300.
Okay, let's move on and let's talk about the fundamentals as well. And Ajay Bagga joins in on the show right now. Ajay, hi, afternoon. How is it that you're mapping the market mood? Resilient but not joyous?
I think resilient and optimistic is the shift after the exchange of pleasantries between Trump and PM Modi. I think that's the change.
All right, but along with that, Ajay, in the latest, we have also seen rupee hitting a fresh low for itself versus the dollar. And well, of course, Ajay, it's been a while that FIIs have been the net sellers, especially in the cash market. How do you see the rupee movement going ahead? Because while a couple of months back, we have seen the sharp correction coming in, and RBI really had to come ahead to really tighten the kind of volatility that we were facing that time. What are your views right now?
No, if you look at our current account deficit, it's not been ever better. Last quarter was at about 0.2% of GDP. FX reserves are going up. I think this is an orchestrated move where, in a very slow and steady manner, the RBI is allowing the rupee to depreciate to make the exports more competitive, to take away some of the sting of the tariffs. So I would not be very fessed up about this. You are seeing the FX reserves actually increasing. Overall, if you see the country's balance of trade, balance of payment, and current account balance, all three are pointing to a lot of robustness. Remittances are at very high levels. And guess what? Even July exports were strong because there was a lot of front ending before the US tariffs came in. Now, let's see what the August numbers show. But I would not be very worried on the rupee. And RBI has a calibrated mechanism, though officially we say that we don't manage the rupee, but you see a 2 to 3% depreciation happening in the rupee against the dollar. Of course, where euro or Japan or Swiss franc have been going up, we see the rupee as a declining currency. Yes, very much. But you have your FX reserves, which are showing that it's not a function of demand and supply. It's more a calibrated devaluation that's happening.
Right, Mr. Baga, all this optimism and resilience that we're talking about, that we're expecting to see in the markets, as of now, we're seeing it only coming in from domestic investors, because as FII flows are dwindling and they're looking weaker by the day, you have some show of support coming in on the DII front. But what could be the trigger for the FIIs to make a comeback, because they have been consistent sellers for quite some time now?
About 1,500 billion of 1.5 trillion of FDI flows and FI flows happen in the world. We get a very small portion of it. But that portion has to be interested in India, has to be interested in that valuation. Then you find companies which can excite them, or you get country level ETFs, which again, it's not that the world is beating a path to India. We have all our, what we keep on applauding ourselves, the best macro, the fastest growing large economy, a great domestic consumption market. All those are factored in. But the issue is on the margin, money is not willing to come in at 23, 24 times forward earnings when the earning growth has been quite slow. So one, the earnings growth has to hit our bottom. Then we know that, okay, now we made a bottom, and from here, earnings should start going up. I think we have done that in the June quarter. We'll get to know in the next 3 more months. We'll get a better idea. September, of course, the numbers are a little on the muted side, but there's a lot of hope post the GST2 coming in, that volumes will go up. That will help companies to also shore up their bottom lines as the top line goes up. So overall, the issue with FIs is your earnings growth versus the valuation. Valuation had run up, but now 12 months we have paid the price of underperforming. Normally around this time, you do see a turn happening. Between say 50, 55 weeks, normally you would see a turn happening. So it's a matter of time, I would say. What the catalyst will be, it might be Trump, it might be some leeway coming in on the tariff front. It might be some other reform being announced by the government. Some catalyst will come in. Earnings will take 3 to 6 months. You will start seeing that happening. September, again, a muted quarter is coming up, but it will be better than the June quarter. That's our estimate.
Okay, that's the take coming in right now on what to expect from the markets. But consolidating its market position, Tega Industries has acquired Molycorp with Apollo Funds for a whopping $1.48 billion. Ashesha is here to share the highlights of this very mega deal.
Well, yes, big acquisition that was announced yesterday evening worth about $1.5 billion that translates to about over 13,000 crores, where Tega Industries yesterday said that they've announced intent to acquire Molycorp in consortium with Apollo Funds, and this will involve acquisition of 100% shareholding, 77% will be held by Tega and the balance 23% by the other partner, which is Apollo Funds. Now, as I mentioned, the total consideration is at an enterprise value of about $1.5 billion US dollars and deferred contingent payment to the tune of about $120 million US dollars. As far as the valuation is concerned, this deal is happening at about 8.6 times FY25 EBITDA, and the transaction is likely to be completed by the end of this financial year itself. Now, if we talk about the company which is being acquired, Molycab, now remember this is a leading global supplier in grinding media for the mining industry, but that's a big acquisition that has come in. In fact, we also have a few brokerage reports. We have Centrum, which says that product portfolio of Tega and Molycorp are highly complementary in nature, which is likely to aid the companies. Synergetic benefits are expected to be on the higher side. EV to EBITDA multiple at about 18.6 times is fair. So the valuation wise, the transaction is absolutely fair, and this could also lead to significant value unlocking for Tega due to scale and cross-sell opportunities. So brokerage houses are very positive, and it's a big acquisition because of which Tega Industries is in focus today.
Some part of the debt will come off because of the equity infusion between Tega and Apollo from our SPV into the target. But at the same time, we have a plan of how over 5 years we can deleverage the business down to closer to 2.5x in the next 5 years. I think over the next 3 years, we're looking at a return on equity of closer to about 18%. And we would be working towards a timeline of extracting that synergy from day one. If you look at Tega's current EBITDA, that more than sufficiently covers the interest burden or interest servicing of the senior debt at Molycorp level. After depreciation, there's still operating cash flow or free cash flow in the business. So the debt, while it looks large, the Molycorp EBITDA margins support it. It currently is at about 11% of revenue at an EBITDA level for Molycorp. We're looking at expanding that to anywhere between 14 to 15% over the next 3 years.
The management of Tega Industries on the back of that Molycorp acquisition, but the stock is taking a little bit of a beating today, down 2.3% as we speak. But let's talk about some other stocks that are in focus today. You have a lot of sectors that are buzzing. You have oil and gas that's doing well, power, metal, but a stock that really stands out today, Kunal, is GAIL. There is a positive brokerage note coming in on GAIL, wherein a 30% upside is seen to the current stock price in the near term. Is that something that you're seeing on the charts too?
Well, the indicators have started to look a little bit more positive for GAIL. The stock today is showing signs of, a breakout on the swing pattern. So, it's more like a inverted head and shoulder pattern for, GAIL. The breakout point is just around that 180 mark. So maybe a percentage higher from current levels is where the breakout would get confirmed. But then I think, with the strength in indicators coming back, there could be a high potential up move for the stock in the near term. And, this could also, gel up very well with the entire PSU theme starting to make a comeback for themselves. So there could be short covering, which could be the key trigger for many of the stocks, or there could be, some sort of a positive news flow, which could happen into these spaces. But I believe that many of the stocks, including GAIL, could see a decent upside. For a trading perspective, I think at current levels of 179 for someone who's looking for a buy, I think 188 could be a decent target over the near term with a stop loss closer to 174.
Okay, in the meantime, you're seeing some flashes on your screen right now. The fact that ISMA has urged the government to up the prices of ethanol, but this has been a very long-standing ask in any case. They have been urging the government to raise ethanol prices, particularly for ethanol derived from sugarcane juice and B-heavy molasses as well. Remember, the government had also upped prices, but that was for C-heavy molasses-based ethanol, which was in January of this year itself. So no new update in that sense as of now, at least. But in the meantime, just taking stock of what else the texture of the market is looking like. Today, you've got some of these capital market plays which are taking profit, taking definitely. So Novama, BSE, Angel One, all of them are down about 3.5% to about 5.5% a piece or so. Arpit, is there a trade in any of these capital market plays? Today, they're having a bit of a down day.
So looking at the overall chart structure, if we talk about all these counters from last couple of weeks, this counter has been trending downwards. So in spite market is heading northwards, but this counter is having pain on the upside. So if you look at the chart structure of particularly Angel, the stock has been a huge underperformer from last couple of months. On the weekly setup also, it failed to surpass its major support, major resistance zone around 2350, 2400 levels. And look at the chart setup wise, definitely is in downtrend. So I think a closing below 2200 will definitely can see some more weakness towards 2100 levels. So I think looking at the chart specifics, all three counters looking downtrend, and Angel, the selling pressure could intensify below 2200 levels for weakness towards 2100 levels with a key hurdle around 2280 zones.
So that's the take on the chart, some of those capital market theme stocks. But let's focus to macros. And India is expected to release its inflation data tomorrow, the CPI numbers. Let's take it across to my colleague Varun to find out what the analysts are penciling in on the same. Where is the street pegging this CPI number to be at? Varun.
Well, so as per Reuters poll, the CPI numbers for the month of August is expected to come at around 2.1%, and the wider range is 1.35% to 3%. Now, this would be the first month after 9 continuous months of actually decline in CPI. So this time we are seeing an increase in CPI from actually 1.55% last month to around 2.1% in the month of August. Although it would be the 7th continuous month wherein the CPI numbers would be below the RBI threshold limit of 4%. But yes, we are seeing an increase in the month of August at least. Now, what would lead to the overall increase in the CPI numbers? So it would be the base effect, because if you look in the base, the overall vegetable prices were very high, and the base will actually fade away in the month of August, and that's the reason you will see an overall increase in the CPI numbers. Now, the vegetable prices on a month-on-month basis also are expected to rise around 2.5%, and this would be led by around 26% month-on-month rise in the prices of tomatoes. Also, the prices of cereals, they are expected to go up on a month-on-month basis, led by wheat, and the prices of pulses are likely to decline in the month of August on a month-on-month basis as well. Also, edible oil, they will see the price of edible oil, they have seen an uptick in the month of August, so even that would aid the overall CPI numbers. Now, the core CPI, that is expected to inch up to around 4.23% in the month of August, and this would be largely on account of higher gold prices. So there are several things that would lead to increase in the CPI numbers, especially it is a base effect that is fading off in the month of August, and that's the reason after 9 months of continuous decline in the CPI numbers, this time the CPI numbers will increase, and 2.1%, that is a Reuters poll.
Okay, that's what one is picking up in terms of what the inflation anticipation could be. But Ajay, since you do track, global updates as well, soon enough you'll have the much-awaited Fed meet. It seems like after a long hiatus, they're going to be finally easing, and a 25 bips rate cut could be on the cards. But what does it do to the global, equity market flows? And do you think then in that case, money would move back to US equities in some sense?
Absolutely, Aisha, spot on. If you see the last 6 weeks also, there's a net positive flows into the US markets. And with the rate cut imminent, the attractiveness of the market goes up. Overall, if you see when rate cuts are done by the Fed in a non-recession US economy, the S&P 500 goes up for the next 12 months. So there's a lot of positivity about the future of the US markets, despite the narrowness of the markets. The top 7 to 10 stocks make up most of the earnings growth, make up most of the market cap growth. The valuations are not cheap at all. They are at the higher end of their overall average. So it is not a cheap market, but it's an exceptional market still. One, it's getting just yesterday, Goldman Sachs Family Office report was out. About 57% is the preferred investor outlook towards the US public equity markets. Within that, AI and technology grab the lion's share. So that exceptionalism is continuing. 2% GDP growth in the US looks quite doable. And the labor slowdown, the job slowdown that we have seen, a lot of that has also to do with a lower supply of labor in the market, as well as the policy chaos unleashed by the Trump administration. So overall, the big beautiful bill has to come in. So those tax concessions will come in. CapEx starts coming in over the next 12 months, and the deregulation. Along with that, if you did not need a rate cut stimulus, rather you're putting more fuel into a raging fire by cutting rates. But the labor report, the jobs report has really put the consensus towards a rate cut. And now markets are factoring in 3 rate cuts. Let's see if those come. The other pleasant surprise has been the tariffs have not flown through into the economy. $88 billion of custom duties have been collected by the US. But the impact on, you saw the PPI numbers in the US, which is basically the wholesale inflation. That number was negative month on month. And today you will get the consumer number. We're not expecting more than about 0.3% month on month growth and about 3% odd year on year. So we have not seen the flow through yet of the tariffs into the US economy. Again, what the Yale Budget Lab makes a calculation based on the weighted average US goods. Tariff collection should have been 18%, but it's coming in at 11%. So there are some concessions which are going through still, and you're not seeing that 18%. And definitely even that 11% has not translated into higher price of goods in the US economy yet. So there is no reason to cut rates, but rate cuts are coming next week. So markets will just celebrate on that.
Absolutely. Kunal, what's been your historical reading? Because, most world markets are already sitting at life highs, like we were just discussing, not just US, but a lot of Asian markets. China, Hong Kong, of course, have been much late into the rally, but they've been doing very well. A lot of the European markets are also doing well. And then there are other asset classes like gold too, which are at an all-time high. But do you think these markets, and especially US, should there be a rate cut by the Fed, do you think it has scope to move up further?
Well, I definitely think so. In fact, it's a classical point over here that many of the global markets are already into a bull territory for themselves. Whether you start off in the US markets, which have been the major indices, whether it's Nasdaq, S&P, Dow, etc. These indices have clocked major gains for themselves and recovered from their early corrective part in 2025. So I think in that context, it sets the tone very well for the global equity markets. Starting from the US. European markets, I think over the last 2 years have been doing very well for themselves. DAX, CAC, as well as FTSE, I think all 3 of the indices have done reasonably well. And there has been a lot more steady turn, change of trend for these indices. The change which has happened for this calendar year, and maybe I think it started off from the previous year, was the 2 major Asian economies. I think you'd seen Shanghai making or at least coming back towards a 52-week high for itself, very close towards the previous 1 year, 2 year high, and Nikkei, I think, coming back to that 40,000 plus mark and at an all-time high levels. These are classical turning points, because when you look at this in the context of the entire bull market, the global bull market, especially the developed markets, they were doing very well for themselves. The Asian markets were lagging behind, but now with this last 6 months, 1 year of price performance, it indicates that the Asian markets have also started to look very attractive. So I would believe that India has a very good chance over here when we look at this relatively in terms of the global equity markets, to continue to do very well for itself. So, if the global bull market continues, say, for another 6 months or so, we could be looking at a much stronger upside.
Okay, important piece of news, and we're just winding up for the day, but it seems that long-term F&O contracts are not part of the SEBI board meet agenda. Before we wind up for the day, let me quickly take it across to Ankur and find out what exactly is he picking up on this.
Yes, we have understood through sources that long-term F&O contracts are not part of the SEBI board meet agenda. We have learned from sources that, yes, SEBI chairman had earlier given statement on the same that SEBI is in discussion with the stakeholders regarding the long-term contracts of F&O. Remember, there was a statement which was given by SEBI chairman in which he has clearly mentioned that there will be discussion with the stakeholders on the whether or not weekly expiry rationalization should be done further. Why I'm saying further? Because from October 1, there has been several steps which has been taken by SEBI regarding F&O, and now there were news going around that will there be an end to F&O weekly contracts? No, that is the current answer which we have learned through sources. But yes, SEBI has been working towards it. That is it a good idea to go ahead with long-term F&O contracts? But for now, we have understood that in SEBI board meeting, there is not going to be any discussion regarding F&O contracts, regarding the rationalization of weekly expiries. But yes, SEBI has been working on this. SEBI will take views from stakeholders whether or not this is a good idea after the meetings which are done. Only then there will be a consultation paper, which is the case with SEBI for all the matters. And that process will be followed by SEBI in F&O as well. And sources have informed us that it is not part of SEBI board meeting agenda tomorrow.
Interesting. We don't have enough time to analyze it, but Kunal tells me it's good news that it's not at least part of the discussion right now and that it should not happen. But we'll discuss all of that. For now, we got to wind up for the day. So let me take it across to Snehi and find out how the closing trades have been.
Well, yes, let's start winding down for the day. We're joining you live from the SBI Live studios. Nifty absolutely flat, incrementally below the 25,000 mark. Last 30 seconds left. Let's see if we're able to hold on to that mark and cross that. Sensex 0.1% higher. Nifty Bank is also doing pretty well. 0.3% higher move coming on that front. It's the rupee that has taken a knock in today's trade at its all-time low, or high rather, if you could call it, against the US dollar at 88.4. Select sectors have done well. Energy, PSU banks, pharma, metal, bank, FMCG, realty ending in the green. On the flip side, pressure building on select IT names as well as auto. You had some stocks that have done well today. Tega Industries on the flip side was under pressure on the back of that acquisition news, but Aurobindo Pharma, a stock, has done very well for itself. GMDC, Fortis, a lot of these stocks, Acme Solar, have reached their fresh all-time highs as well. So basically that is in a nutshell how the markets have performed today. 25,008 seems like we've closed around there. We'll give those rates some time to settle, but in a nutshell, this is how the market action has panned out for the day.